Hey, what's up, everybody? It is Monday. Sorry, just sitting down here. Yeah, I didn't do a video on Friday. Sorry about that, guys. Anyway, I'm going to start out by saying please like and subscribe. For all of those of you who have already done that, I appreciate it. Thank you very much. And plus, we're going to get a big thunderstorm this afternoon, so I wanted to do this early. And there's a couple of things. There's some tropical stuff happening in the Gulf. I think it's going to miss us, but there's two other disturbances with a pretty high probability of formation coming in the next 7 days. So got to look out for that. I watch the National Hurricane Center website. Look at the Hurricane Center website every day. Check the satellites, check the tropical weather outlook, because it's Florida, man. All right, what I want to talk about today, first of all, this rally today. If you're a subscriber to my report, and I think I maybe even mentioned this in my video on Thursday, I said like leading fiscal flows are very strong. Very strong. We're up 165 billion over last year. So I said there's a very good chance that we get a bounce here. But like I've been saying, I want to repeat, because it's very important that I repeat these ideas so they sink into you. Everything changes when the Fed cuts rates. Okay? We haven't seen that in, they've been on this, they started raising rates in March 2022. I think this is like 6 years since a rate cut or something. We haven't seen that. So I want you to keep that in mind. And I've said, everything is the same. Nothing has changed until those rate cuts happen. So once that starts, and by the way, I will mention that in my report this week and in my research, and this may be a little bit of an early call, but I did see some deceleration or some contraction in the year-over-year comparison in interest income transfers. So that's slowing down. This year, interest income transfers are slowing down. They're decelerating. And once the Fed starts cutting rates, that's gonna, it's gonna get more intense, that deceleration. So everything I've been saying so far is correct. Now, if you look at the markets on a day-to-day basis, you could say, oh, you're wrong, or you could say, we don't, look at how it's behaving. I've always said you got to step back and have some perspective. It's very, very important. And that's my lead into what I want to talk about today. I've done many videos on the concept that the stock market is a growth function, and also most commodities are a growth function because they are finite. Gold is a little bit different, because every ounce of gold that has ever been mined since the beginning of history, it basically still exists, okay? So there is a price level that could bring that historic existing supply to the market. But this is not a video about gold. The stock market is a growth function. It reflects the growth in the economy, which is really tied to the growth in the population, innovation, a relatively free system that we have here in the United States, the democracies, pretty much. Okay, could have an argument about that, could have a discussion about that. Innovation, technology, higher standard of living, etc. And I've spoken many times about my personal journey as a trader and an investor, as a former member of 4 futures exchanges where I was trading on, 4 different floors. And I spent a lot of my time just wanting to go short, wanting to sell the market, wanting everything to crash, no matter where I was. I could have been in S&Ps, I could have been in oil, I could have been in gold, I could have been in the New York Stock Exchange Index. I mean, I always somehow wanted to be a seller, and it was not unique to me. like I've recounted in past videos, just about everybody in those pits, with the exception of a few guys who were on the right side, they always wanted to sell for some reason. And this kind of behavioral quirk where you're always looking for a crash, or you're always looking for some really short-term dopamine rush, some adrenaline rush. This is really a behavioral characteristic of people who are into gambling. I mean, it's not so much, and I'm not talking about gamblers who are very, very astute gamblers like card counters in blackjack or very high-level poker players. I'm talking about most people who go to casinos, maybe play the slot machines, maybe play some blackjack or whatever, some craps. And it's about the excitement. It's about the excitement. That's why I really don't advise shorting anymore. I mean, one of the biggest, not the biggest, but one of the most famous short hedge funds. This guy, I totally forget his name. He had kind of like a Greek name. I don't know. It just liquidated. I mean, he never really made any money. And the idea is that, and I tell people, like, what you want to do is accumulate good assets over time. I mean, this is what Warren Buffett has done. Charlie Munger, who was his former partner, the late Charlie Munger, he's spoken about that so many times. This idea of jumping in and out, and that just goes to a desire for action. That is not about making money, okay? And when you understand that the stock market is a growth function, physical commodities are a growth function, at least price-wise, okay? Not supply-wise. Actually, supply-wise, they're a diminishing function because they're finite. I mean, unless we start mining asteroids, which might happen at some point in the future, but it hasn't happened so far. Unless we start mining asteroids, commodities are finite. I remember when I first became a member of the NYMEX, the New York Mercantile Exchange. My uncle said to me, your future is made, because it's just going to go up. And it's like when he said that, it went in one ear and out the other ear. And by the way, back in those days, crude was trading like $18 a barrel. I mean, if it went up to like 25, that was something out of this world. Like, how could it get that high, But I never paid attention to what he said. I was always in there every day trying to sell it. And now look at it. We have a price of $68, $70 a barrel, which some people would say right now, oh, it's down, it's low, it's crashed from its highs. And I just say, oil is finite. You take oil, you put it in your car or whatever, we burn it, it's over, it's done. And I know that there have been forecasts over and over and over again about peak oil, and it never seems to happen. But it will happen one day, okay? And the point is, this is where patience comes in. This is where the idea I'm trying to transmit to you people here is that, like, it's much better to be on the buy side for these things. Stocks, commodities. I said gold is an exception. You could trade that. It's economically sensitive. And again, I'm not going to do this video on gold. So when I say we're coming into a period now where there's going to be fiscal drag, all right? I'm not really recommending a short position, although if you are inclined to trade, that's the position you want to have as the market bounces back here a little bit. And again, I did say on Friday, I sent out an email to my subscribers saying that very strong fiscal flows, the market got oversold, the economy is going to be supported by these fiscal flows until things change when the Fed cuts rates. Okay, so the bounce was totally should have been anticipated. I sent that out. All right, but I would use whatever, and even if we go into recession in 2025, which is my call right now. Okay, I'm not equivocating on this. I'm saying that unless there is an offsetting fiscal response, and we have to get through the election and see who gets elected and see what policies are passed, unless there is an offsetting fiscal response to the rate cuts, the expiration of the Trump tax cuts in 2025, the reduction in the COLA increases for Social Security, Medicare, Medicaid, veterans benefits, military pay, etc., blah, blah, blah. All right? Unless there is a fiscal offset to those things, the fiscal drag in 2025 will slow growth to zero, and I think, slightly negative. Not crazy negative, at least not right now, but it depends on how many rate cuts the Fed puts through. And here's the thing. When they start cutting rates, that's like stepping on the brake on your car. I've given this analogy before. And when the car slows down, the car, let's call the car the economy, when the Fed sees that, it's going to cut again. That's pushing harder on the brakes. Then it's going to cut again. That's pushing harder on the brakes. And we get into this self-sustaining cycle of rate cuts. So the contraction could end up being, pretty severe. The good thing is I follow these numbers on a daily basis. Like I already told you, I think I see already a deceleration in these interest income transfers, at least in the Treasury bill discount. So that's the first thing I want to talk about, to have this kind of big picture perspective, not get freaked out, not be sitting there, staring at your screen all day long. I want to buy, I want to sell, I want to buy, I want to sell. Like Charlie Munger, the late Charlie Munger said, that's like, when they started showing that to investors, that was like giving them heroin. It was stupid, all right? The other thing I want to talk about is the dollar. Okay, the dollar's been going down now, very, very understandable on this zombie monetarist selling because of a cut in interest rates that is coming, okay? Let me just, I've tried to address this issue before. There's something like, if I have my number right, there's something like 8.7 trillion of dollars being held by foreign governments, okay? That is U.S. debt held by foreigners, okay? The debt basically is dollars in the form of Treasury security, government securities. If, selling pressure in the short term is meaningless. For example, if I'm China or I'm Japan, and I want to dump my dollars, and I sell my dollars to, Brazil or the UK, the dollars are still in the global system. It just, what happened was a change of ownership. It went from the Chinese, who have been unloading their dollars, or the Russians, who completely unloaded their dollars, and it went to another counterparty which took those dollars, and actually the amount of dollars being held by foreigners is at a record high, okay? There's only one way for the rest of the world, the foreign sector, to get rid of their dollars, and that would be a net transfer of those dollars to the United States. How does that happen? It happens by buying goods and services that are produced in the United States, or capital investment into the United States, buying plant, buying equipment, buying land assets, whatever. And in that case, if that were to happen, the U.S. current account balance would become a surplus, meaning that there would be very few dollars in the foreign sector at a time, when dollars are necessary for transaction globally. You would have to come up with an alternative. And there is no alternative right now. People talk about the BRICS. Well, guess what about the BRICS? All those BRICS countries want to run trade surpluses. So who are they going to sell to do that? They have to sell to the United States. The BRICS are a joke, okay? The BRICS are a total joke. So when the dollar goes down because of some short-term selling pressure, because zombies think the Fed is cut, or they see the Fed's going to cut rates, it doesn't change the equation, okay? It's just like a short-term reaction. Somebody's transferred dollars from one entity, China to Brazil or Japan to the UK. The same amount of dollars exists in the foreign sector, maybe even more, okay? And so it's like very simple arithmetic. It cannot go down unless, even when they transfer everything to the United States by buying every single product and oil and petroleum, that would shrink, that you have to come up. The only way for the dollar to go down, folks, listen to me. The only way, I'm talking long term, not the next week, not the next month, not the next 6 months, okay? Long term, the only way is to come up with another unit of exchange that completely replaces the dollar. Then the dollar would be in trouble. And it's not Bitcoin, okay? And it's not gold. Maybe it's the Chinese currency, but they are fighting against it. They don't want to run because, by definition, to supply the global financial system with yuan, the Chinese currency, by definition, they would have to run massive trade deficits. In other words, every country would have to sell to them, and China, as a policy, is against that, okay? They try to limit that. They have impediments to trade. They have barriers, stuff like that. They want to be an exporter. So right now, I don't see that happening. Anyway, that's it for today, folks. I hope you enjoyed this discussion. Thank you for liking and subscribing if you did. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. It's all in the long term. It's in the accumulation of assets. And it is in the understanding of how the monetary system functions. And that's what you learn as a subscriber. I put out daily, many times, emails and occasionally stock recommendations or currency, stuff like that. So I'll see you tomorrow. Bye.